Good morning, everyone. Steve Gans here, and welcome to the weekend update on March 9th, 2025. Now, let's start by taking a look at SPY in this huge protracted uptrend that has been happening for a couple of years. Now, little twist on this. I mean, obviously, we can see this, we can see the falling out, etc. But let's look at the price point. It's 433. Let's look at our dates. This is back in 2020 up through 2022. Now, the reason I'm going back in time and I wanted you to see this is I now want to spin forward a little bit and I want you to see how similar these two are, okay? So this is back in 2020 up to January 2022. Then we dropped out of the channel. We came back down to prior resistance, chopped sideways for a year, and then we continued our uptrend. So we're now in this uptrend, and we have fallen out of that channel. Now, it looks like I might moved my channel here a little bit by mistake. Let me recenter this channel where it should be. And there's been a couple times that we've dropped out of this channel. So we dropped out of it a couple months ago, quickly rebounded, then we've stayed in the channel, then we dropped out of this channel again here just this last week. So what does all of that mean? Well, a couple of things. Last weekend, I said that we could easily drop down to this resistance area here, which we did. And then I said, if we break through that, we're likely to come down to this support and resistance area here, which we came down to and just touched. And I also mentioned this blue line, the 200-day moving average. It's pretty critical in most people's minds, the long-term people that study the market, the analysts, etc. This 200-day moving average is kind of a big deal, and it's important that this holds. Now, on Friday, we came down below the 200-day moving average, but then at the close, we rallied back, and we were almost right back at that 200-day moving average. What do I expect from here? Well, it's going to be an interesting week. I know I said that last week too, and this is when you drop out of a trend, things go a little weird. You don't quite know what to expect. It's kind of like you have a good friend that has a certain character about them, and you know you can count on them for certain things, or maybe not count on them for certain things, and all of a sudden they start acting a little bit differently. Well, that's what's going on here. And of course, this acting differently is fueled by things such as what's happening in the geopolitical environment out there, what's happening with tariffs. Are they on? Are they off? What's happening with inflation? Is it up? Is it down? All of these different things are what are fueling this, I'd call it to some extent, fear in the market, people bailing out of the market. So we've seen a lot of down days. We're also noticing that our down days, the volume tends to be a little bit higher on down days right now. That tends to cast a little bit of a bearish tone to the markets. So again, that leads us to be a little more to the bearish side. What is prompting me maybe to consider that we're not fully bearish is, let's take a look here. Let's do a little measurement. And I want to measure where we are from the top of the market here back a few weeks ago down to its lowest point, and that drop was almost 8%. We can see that, let's see, let me get right on that. We can see it's 7.87%, and that happened over 12 days or 12 bars, 16 total days, but 12 market days. That's a pretty rapid drop. It also is almost hitting 10%, which is what is considered a normal and typical correction in a market. When a market pulls back around 10% or so, that's considered correction territory. It's also considered what they call backing and fill. Basically, the market pulls back so we can see Who is going to get shaken out of their positions? Who are the shorter term traders that just say, you know what, I'm done. I've had a lot of profits in this market from here to here. I don't know what's going to happen now. I'm out. And that's where a lot of the selling comes in. And then you have what many people refer to as diamond hands. These are people that want to hold positions much, much longer term, and they're looking to buy shares from the quote unquote traders. When those traders get shaken out of the market, those diamond hands, the people that are looking for long-term positions, start to come in and will buy these positions. So we've got to see if that's going to be happening here or not. I'm very, I guess I would say, neutral at this point because this is holding. That's a good sign, but it has been a pretty fast and furious drop with increasing volume. Now let's take a look at volatility, see what's happening with volatility. So volatility on Friday did spike up here to a new recent high. It still hasn't exceeded here, that 28 mark. If we exceed this 28 mark, obviously it will be in a further protracted down move. So right now there's a moderate amount of fear in the market. Let me just extend this out. So we're certainly above that prior resistance line, but again, we did retreat on Friday. The VIX did, so that's a good sign as the market rallied later in the day. Let's look at the Qs. So the Qs have dropped right down to the bottom of that channel, poked out of it right into a support area. So again, going to have to see how this holds throughout the week this week. The Qs did fall out one other time pretty firmly and quickly rallied back. So we need to see if that's going to happen here again. And this is going to be a pretty telling week. And we can look at the volatility on the Qs, and it also hasn't quite hit new highs here. Then we look at IWM. IWM has definitely fallen out of its channel. It's been in a channel for quite a long time. It fell out firmly, but it is right down here now at what might be considered a little bit of a support or resistance level. And we have a lower one here yet that's probably a little more pronounced. I mean, hopefully we're not going to drop down to that. But let me just see if I can extend that over here. But that is certainly a possibility. But I think more likely, if those other two hold, this one's going to kind of hold in that same area. We look at volatility, same story with volatility. Definitely elevated, but haven't broken above those prior volatility highs. So bottom line is we're neutral maybe at this stage. A little bit to the bearish side if we zoom in on some of this. We can see that we've made certainly lower lows along the way. When we've tried to rally up here, we haven't been able to exceed those prior highs. So we are in a current downtrend where we're making lower lows and lower highs. So we need to see if that can get broken. Maybe we rally up here, we get back above this green bar right here. That would be pretty key if we could get back above that 580, 586 range or so and close above that. That could signal now a higher high of recent days. And then if we get a lower low off of that, we can maybe crawl back into this channel. Now, if we can crawl back into that channel, again, the key will be to see how far we could get up into that channel. That's really what we're going to be looking to have happen. Okay, so for those of you in the alert service, you know that I made a move on Friday that I probably should not have made. I broke a couple rules of mine, and I did put in a chat in the weekly Q&A explaining what those rules were. And the rules were basically two key rules. One is I don't normally adjust until the end of the day. And I did this midday as the market was breaking down to new lows. And also we were going to have President Trump and Chairman Powell speaking. And because the market was selling off hard and breaking to new lows before they spoke, I made an assumption that somebody knew something, that whatever they were going to say was really going to push the market down much further. So I went ahead and I adjusted 3 positions. I adjusted this one, I adjusted this one, and I adjusted this one, giving them all a little bit of negative delta. So that was mistake number 2, quite frankly, is when I adjust positions, again, my butterflies, which is these trades right here. So the butterflies that I have on, that I usually have spaced out about a month apart from each other, I like to keep them as a group somewhat neutral. That's my diversity. So if one of these has some negative delta, I like to keep the other one maybe with a little bit of positive delta. Maybe one will be a little more neutral. So they balance each other out. Well, going into the speeches and the way the SPY and the SPX were breaking down below the 200-day moving average, the speed of that drop was starting to accelerate. I became convinced that we were looking at a pretty significant down move that was going to happen. So as a result, I shifted these to pretty much all be a little bit negative delta, meaning they're going to benefit if the market goes down. And of course, once those speeches happened, our market ended up rallying back up. Obviously, not a good thing for these positions. So what do I do in that case? Well, I basically come out and I own it. I did say going in, when I went to make these adjustments, I explained to people, if you are bullish or if you think we're going to get a bounce, you do not want to make these moves. So I was pretty clear as to why I was making the moves, that I was bearish, and that if you had a more bullish tilt, you would not want to make those moves. And I know some of the traders did not make those moves, so good on them. And then I had to come back in and kind of do a little bit of reversal, and I chose to do it on this one right here because this is the one that expires the soonest and is going to be the most impacted. So basically, I took this particular trade, which had been a butterfly, and I took the lowest leg here and I calendarized it. I moved it out in time, and there's a reason that I could do that that was a favorable move to make right now, and that's because of what's called backwardation. So the front period, the closest expiration, had more volatility than the further out expiration. So because of that, you get a little bit of an edge that makes a calendar or a diagonal be a little more worth it to do at that point. I have an entire class on calendars and diagonals. I'll put a link down below if you're interested in exploring that further. But that's what I did on this particular trade. Now, this does give us a much larger theta number. So theta will decay faster in this now that it is calendarized. So what I'm looking for is our markets to largely maybe hold up in this general range, and decay will come in fairly quickly since we're only a couple weeks from expiration on that one. These other two I'm not as concerned about. Quite frankly, while our market did bounce on Friday, I am not convinced that we're going back into an uptrend. If I were to put odds on this, I'd say 60% is we're going to newer lows, 40% we might bounce from here. So I'm still in what I would call a bit of a bearish mode. So the other couple positions are FTNT, wheel strategy. I did roll those puts out this week. Those are doing just fine. I explained why I rolled them out at one point. We were looking at potentially getting assigned on those. And while I'm okay getting assigned, I don't want to necessarily get assigned when the market is breaking to all new lows and I'm looking at the potential of a much more aggressive down move. I don't necessarily want to own that stock right then at that point. So I did roll those puts out in time, and I rolled those puts down a little bit in time. Our puts had been at 105. I rolled them back to 100. And then SQ, which moved to XYZ. Things had been going along fine in this trade. This is a leap. I own calls that are dated out 2 years, and had been going along fine. And then there was an announcement of some potential for accounting irregularities that occurred back in 2023. That caused this thing to drop fast and furious. There was no real time to adjust it or rethink it. Now it has dropped down to this point, and it's kind of stabilized there. It's sort of chopping sideways right now. So I really want to see if there's a chance that this thing may be recovering, starting to move up a little bit. I've also done some more research on what the accusations are. I'm not sure those accusations are totally valid, but at the end of the day, none of us will know till it gets into the courts and we see what the courts say about it. But I'm hoping that as more and more people look at them, they'll realize that they might not hold the water that they originally think they did. And in that case, this could very well start to move back up. So I'm not totally pulling the plug on this one yet, but it's certainly on my radar as something to think about, for lack of a better term. And then we get to this one, Lucid. So for those of you that are interested, I'm going to do a deeper dive on Lucid. You'll see that on the YouTube channel. But there's some pretty good news that has come out on Lucid recently. As you can see down below here, the Lucid Gravity was just ranked the #1 electronic SUV with a 10 out of 10 rating. Now, this car is just now launching. They only have about 100 or 200 of them that have been released, but it's getting very good accolades out in the market. There was also on Friday an analyst that came out upholding a $5 price target for Lucid. Now, of course, there's other analysts that have a price target at $1.50 and at $2 and things like that, but we're starting to see a little more traction here. I will also tell you that when I picked up my car, and again, I'll have a separate video on that where I'll kind of show some photos from that, etc. But when I talked to the sales rep there at Lucid, or the delivery guy, the person that walks you through the car, he said they have been busier than ever. They're doing more deliveries than they've ever done before. Where I picked mine up in Orange County, California, 3 doors down is a Tesla service center and a Tesla delivery center where people pick up new Teslas. And he said they have had more people walk down from Tesla, people that are just not happy with Tesla right now. I shouldn't say they're not happy with Tesla. I think they're not happy with in many cases, the leadership of Tesla and some of the things that seem to be going on there. And many of them are taking their cars in for a service, or they're going in to look at a Tesla. They see this Lucid dealership 3 doors down. They're walking down there. They're getting a lot more test drives, etc. They delivered more cars in January and February than they've ever done back-to-back months before. So I think we're definitely seeing a little bit of an uptrend there. The major down spike that happened, I think happened because of Peter, essentially the founder and president, is no longer there in that role. Now, there's a lot of questions as to why that is. Was it his choice? Was it someone else's choice? You'll find news articles that cover all of that. My consensus is that they're moving into a new phase right now. Lucid is moving into a new phase where product development, which was Peter's key focus, isn't at the forefront anymore. Now what needs to be at the forefront is marketing and production, getting the cars off an assembly line, out the door, and delivered. So I think there was probably a shift made behind the scenes to get a new president in there, CEO that's going to have more of that type of background and experience. So that's just my read on what happened. Time will tell which one of those, if any of those, is the accurate thing. But that's what I seem to be feeling is happening there. So with that, I'm going to wrap up the weekend update. Thanks so much, everyone. Again, if you find this interesting, please click the subscribe button, the like button. If you're interested in the alert service and what that is, how it works, etc., I'll put a link in the description below as well. Take care.